Hi everyone, welcome to the channel. In this video I'm going to show you how at age 22 I have converted £16,000 initial investment into 95,000 over the course of less than 4 years. Quick disclaimer, I didn't start with a very large sum of money. I had £2,000 which I inherited from one of my late family members. The rest of it I've earned myself and invested with my own money. Ignore the sound of my laptop, it sounds like it's about to take off. It's because it's very old. Right, so I'm going to run you through my journey from pre-18 all the way up to where I am now. So as a 17-year-old, I'd always had a sort of eye out for anything money related, and during this time something big was happening. So when I was about 17 and 3/4, a little thing called COVID hit at the start of 2020, and instantly I was thinking, this is a brilliant time to get into the market. I don't know where I got this intuition from, but the quote, "Buy when others are fearful and sell when others are greedy," really stuck with me. No clue where I got it from. I probably saw it on some Instagram reel or something. So yeah, this was big on my mind. So I was really curious about the market and I wanted to get involved. But the only issue is, in the UK, you can't open a trading account if you are under the age of 18. So I nudged my mother into making one, nudged a few of her decisions, and I opened a Trading 212 account. Bearing in mind, I had absolutely no idea what I was doing. I just downloaded the account and had birthday, Christmas money to play with. So I thought, go on, we'll give it a go. This was actually the absolute prime time to invest in the market in the past, since I started. So for however many years ago, 4 or 5 years ago, the day I put my first money into the market was, as you can see at the bottom of this graph, March 23rd, which was the very bottom of the market. So as you can imagine, anything I bought, it was going to go up. On the evening of March 23rd, 2020, I purchased random stocks. I had no idea what I was buying. So I bought transportation stocks. So I bought Boeing and Carnival Cruise Lines for no reason whatsoever. Basically a gamble. And the next morning, I woke up to about 60 quid profit, and I was buzzing. I felt like Warren Buffett. I was just on top of the moon. On top of the moon, is that a saying? Yeah, so like when you go to a casino, you win, you get the itch. I had the itch for investing. So essentially, I wanted to carry on this momentum further into my investment career, the £60 profit. It didn't last long, because what happened next was I got involved with this bastard stuff. Can I swear? So essentially, a couple months, I believe it was April time of 2020, so about a month after I started, I started playing around with oil, because oil was dropping to historic lows due to nobody was using it during COVID. Everyone was in their houses, no one had a reason to use it, so it was getting built up and stored, and this was causing excess supply, low demand, so the price absolutely crumbled. I thought, this is another opportunity. This is like stocks all over again. So on the CFD mode on Trading 212, you can purchase this financial instrument that tracks the price of oil futures. So you're not actually buying oil futures, you're buying a financial instrument that tracks the price of it. I had no idea what I was buying. I thought I was purchasing a barrel of oil, and somewhere in Norway they've got a barrel of oil with my name on it. This was not the case. This was just me being an idiot. So if you don't know what happened, oil actually ended up going negative during this time. So I was buying in this V at the bottom here. I was buying on the CFD mode of trading 212, which, in case you didn't know, it allows you to leverage your positions. So leverage is where you can essentially borrow money and buy assets with money you don't actually own, which results in more risk but also the potential for more gains. In this case, I lost a lot of money. I got my stop loss triggered, so this is where the asset is dropping so much that Trading 212 automatically sells out your position to stop you losing any more money. At the end of April of 2020, I lost about 500 quid, which made me feel physically ill. I didn't want to eat. That's how bad I felt, because bear in mind, this was not my money. This was my mum and dad's Christmas money, birthday money that they'd given me over the past couple of years. So I felt like an absolute failure. I never told them, and I don't think I ever will, unless they see this video. This incident really brought me back to ground level and made me realise it's not all fun and games. It's not an unlimited money glitch. Then I turned 18, and as you know, in the UK you can open up a actual Trading 212 account when you're 18, and this is what I did. So some context of where my life was at this age. I inherited £5,000 from my late grandmother, and with this money I spent 3,000 of it to buy a nice little whip, a little motor to get me about, and with the other 2k I set that aside for my investing. With that car I got a warehouse job which I could drive to. I was beginning to earn around 400 to 500 quid a week. Of this I was setting aside 250 to 300 quid a week towards my investment account. Bearing in mind I was living at home, my costs were very low, I was living very frugally. While all my mates were having fun at university, I was slaving away in a warehouse for 12 hours a day. But no regrets, because it turned out to be a great decision. So now I'm 18. I made one of the best decisions I've ever made, which was to open a stocks and shares ISA, which are available in the UK. I think America might have an equivalent, but essentially what it is, and I recommend every person 18, every young person, as soon as they turn 18, open one of these. So essentially what it is, it allows you to invest £20,000 a year tax-free. So that means whatever gains you make on your investments, you pay zero tax on them. And as you can see here, whatever dividends you make, you don't pay any tax on them either. And you can see the difference compared to stocks outside of an ISA. The government nicks a lot of your dividend money. So now that I had my ISA open, I had some income coming in, I decided, let's be smart about this. Let's put some time and effort into researching appropriate investments, because we're starting to play with a lot of money now. So I'm going to run you through the approach that worked for me. Hopefully you can learn something from it. I don't know whether it's the best approach or the right approach, but it's what worked for me. My approach consisted of, number one, find an industry that's going to do well in the next 5 years. So this is very important, because you don't want to invest in dying industries. If the industry is dying, the companies in that industry aren't going to be succeeding over the long term. So examples of industries that I was looking at back then that I thought were going to do well in the next 5 years. So we had like electric vehicles. End of the day, from 2020 to 2025, there was always going to be a increase in demand of electric vehicles. Another industry, for example, could be tech. Tech is always going to be bigger, was always going to be bigger in the next 5 years than it was back when I was deciding what stocks to choose. So, secondly, I would see what companies are leading in this industry or what companies are growing rapidly and starting to capture a greater share of the market. So back in 2020, in the electric vehicle market, Tesla were the biggest name. They were dominating the market. It's a bit different now with all the established car brands like Ford and BMW all making their own electric versions of their cars. But that back then, Tesla were the big dogs in the electric vehicle market. Thirdly, I would find these leaders and then look at what their business models are. So, what core problem do they solve? So, we'll take Tesla again with electric vehicles. People who want to be environmentally conscious and not pollute the environment and even save money on petrol and fuel by using electricity. This really applies to them and it solves their problem of their car polluting the environment. Is it a must-have? Especially in the UK, they're banning the use of, or they were banning, I'm not too sure about this anymore, but they were banning the production of petrol and diesel powered vehicles in the future. So electric vehicles are becoming a must-have, especially in the UK. Is it hard to move away once you have it? I think with a brand like Tesla, once you start using electricity to charge, you're saving all this money. Maybe a expensive initial investment, but once you've invested in it, you see the features and the speed and the quality of the Tesla. I think it's really hard to move away once you bought your first one. What's Tesla's customers base like? Back in 2020, not so much now due to Elon Musk's role in the US. But back then, Tesla had a extremely loyal fan base. There was a lot of hype around the company, which really helped aid sales. So finally, after assessing the business model, you would look at the company's financials, which is very crucial, by the way. It may be last, but it's one of the most crucial points. So you can look at debt. How much debt does a company have? If it's got tons of debt, it's not going to fare very well in times of economic crisis. You've got to look at the growth. A company growing by double digits every year, in my opinion, is a lot more favourable than a company growing by single digits. Markup. What is the gross margin on their products? So tech companies, for example, have a lot higher margins than companies that sell physical products, just due to the nature of tech companies operating a lot online and on the internet. And then finally, cash flow. So if a company reports big profits, this may look good, but if the profit was from a sale of 10 million and credited over 5 years, in that first year you're going to have 10 million profit, but you don't actually receive all that money for the next 5 years. So you receive, say, 2 million a year. So say you profit 10 million, you only receive 2 million that year, and your cash outflows are 8 million. The company's not in a very good position. So obviously you could dive into deeper detail on the financials of a company. I've learned a lot more about this over the past years, but back then these were the four main things I would look at when looking at companies. So I'll spoil it for you. This is how I made the majority of my money, and I'll be honest, a lot of it was luck, but also a lot of it was conviction and research into this company and a lot of faith. The company's Palantir. If you don't know what Palantir is, get to know it. I'm sure everyone knows it now, but back in 2020, 2021, it was a bit more of an underground company. So essentially, what Palantir does is it works with companies' data. So company gives it all its data, and what Palantir does is it cleans it up, sorts it out, and then with this data, Palantir can recommend decisions and ways to make the business it's working with a lot more efficient. Most businesses, once they adopt Palantir, they stick with it for years and years. So if we go back to my approach, point 1, find an industry that you think is going to do well in the next 5 years. AI is obviously one of these industries. As you can see by this chart, the graph is exponential, which in my 18-year-old eyes it just looked like easy money to me. In regards to the second point, what companies are leading this industry? Palantir's business model was, especially at the time, it was very niche. Like, there wasn't many competitors in this sector. There was companies like Snowflake, but the way they operated was quite different to Palantir. So essentially, Palantir was leading this sector while being one of the only companies in it. So what really sold Palantir to me was the fact that the government absolutely loved it. And as we all know, governments have a lot of money, probably too much money, probably unlimited money. They can just keep pumping in to companies that help them and support them. And we know the USA is big on intelligence. It's just a massive government, so they need, with absolutely tons of data, so they really need to look after it and be efficient with the data. And that's where Palantir comes in. And if the government is using a company, it's probably more than likely going to be one of the best companies in that sector. So if we go back to point number 3 here, what core problem does Palantir solve? Well, it sorts data and allows the government to gain insights. And not just the government, but every company that uses it to gain insights it didn't originally have. Is it a must-have or is it nice to have? Especially for the US government, I think it's a must-have, because it really sets them aside from other countries and potential rivals. Is it hard to move away once you have it? It definitely is, yes, because once a company integrates Palantir into their business operation, it's there. They use it for everything. It's vital, and switching would come with big costs and lots of work and just stuff a company doesn't need. And then finally we have customer base. The government is a massive customer base. I don't think Palantir has to worry as much as other companies, because it's always going to have the government, as long as it's doing successful with the government, and it can really focus on growing its customers, because it always had the government to fall back on. So now we move on to the financials. Back in 2021, Palantir had 0 net long-term debt, which for a growth company is very impressive. So if COVID, I don't know, if COVID re-hit, or if the economy went into ruins, Palantir was in a pretty good position to weather this storm. Palantir was also a growth monster back then, with total revenue up 41% from 2020, which was just a great sign. And one of the bits I love most about Palantir was how high its gross margin is. So 78% gross margin, meaning it keeps 78 of every $100 worth of revenue, which is just outstanding, which really showed it was a low cost business, and if they manage to scale this business up, its opportunity is just humongous. Right, so I'm going to take you through the way I was buying Palantir and when and for how much, and whether I was buying anything else at the time. So if we look at the entire graph of my portfolio, this is the 2000 I started with, and then over this period I was investing about £250 to £300 every week into mainly Palantir. And during this time, Palantir wasn't doing the best. I began buying Palantir in this mid-20s range, and as you can see during this time, it was ups and downs, and then suddenly it went pretty bad, and I was down a considerable amount of money. So I think I was down about £5,000 at one point, which as a young lad was pretty tough, especially when you're working these long shifts and all your money's just going down the drain. It's pretty demoralising, but my conviction was there. So during this time I was purchasing, ignore the fact that I have £82 now. So as you can see here, I was buying about today 50 to 250 quid every week during my time at Amazon. See how much we bought this for. We're buying at like $11 a share. Yeah, it was pretty brutal, but my consistency was definitely there. So what I'd recommend is try and think of a target price in your head that you'd like to sell that stock at, and then also pick a time frame on which you're going to buy that stock underneath your price target. So I was pretty ambitious with Palantir. I thought it was really going to do well, so I had a $100 price target back then, and I bought the stock for just over a year. And then I got a bit nervous, and then I stopped buying the stock just in case everything did go bad. Essentially, I bought a lot of shares. So I had about 1,000 shares altogether, across two accounts. So I had 800 in this one, and I sold half of my shares, so 400 on this account, at 100, and then I was going to let the rest of them sit for however many years, but the recent valuation of Palantir has warranted me to sell out. So 4th of Feb 2025 was when I sold half of them for 31,000. Bear in mind my average price was about $14, so pretty good average price. Then we sold another 300 shares for $160 a share. This wasn't long ago. It actually started this month. Well, and then we sold our final 100 shares for $175. And the 200 shares that I had on the other account, I sold early doors. I sold them for like 25, so that was a bit of a silly decision from me, for reasons I can't even remember, just silly reasons. So the shares on this account, luckily, and at one point I didn't think anything good would come of it, but eventually the shares on this account did pull through. I managed to make a decent amount of money. I'd also like to make a point that I've also made some bad investments. So for example, here we have ChargePoint, which was essentially, well, I think still is, let's say the name, they make charging stations for electric vehicles. As you can see, the graph of this is pretty special. I was buying around here, and as you can see, we're down 96% on this investment. I don't know why I still own it, but I just think it's a good lesson to look at. down about 1.7 thousand. So this was one of the biggies I was investing in at the same time as Palantir. What have we got here? We've got Village Farms, which is a cannabis stock, which has actually recently had a bit of a revival. But as you can see, another bad decision. I was obviously banking on the cannabis industry doing a lot better than it has done in the past 5 years. So yeah, I do make mistakes. I am an idiot most of the time. But if you take anything from this video, as a young person, I believe this is the best time. You're never going to get a better chance or a better time in your life. We've got hardly any responsibilities. Well, I have. I don't have many responsibilities, and I especially didn't back then. So taking a risk in the stock market, there's never going to be a better time. Instead of spreading all your eggs out between loads of different baskets, I said put your eggs into one or two baskets and really put as many eggs as you can into those baskets. Obviously, you've got to have high conviction in them stocks. But if you get to the point where you have high conviction, you know a lot about the stock, you've done your research, and you really think it's going to perform, there's no better time in your life than to do it ages 18, 19, 20, 21. Responsibilities are low. The upside potential is astronomical, as you can see. Obviously, of course I'm saying this because I've gotten lucky. Obviously there's probably people who don't get lucky. But all I'm trying to say is that money will come back, and that money isn't as important to us now as it is when we're older. We've got kids, we've got to look after people. So if you take anything from this video, take that. Take risks while you're young. So now I'm age 22. What am I doing with my money? Obviously, you know I've sold Palantir, so I've got a lot of cash. What are you doing with that? So if we go back to Freetrade, I put a decent wad of money into AMD, which deal with microchips, data centers. I've a similar conviction to what I did on Palantir with this stock. AMD are obviously Nvidia's big competitors, but I think there's a lot of food to go around in this market. The big dogs are going to do well. So as you can see, I've made 62%. I'm still buying this stock weekly. I'll probably buy up to, not too sure, maybe like $180, $190. So that's where a lot of my cash is going at the minute. Yeah, I'm not sure I mentioned I use Freetrade instead of trading 212. I don't know why I do it. Trading 212 has lower fees. You get a decent return on your cash in the account. I don't know why I use Freetrade. I need to switch, but switching costs are pretty high, so I've been putting it off. But Freetrade has the ability to invest in UK Treasury bills, which is essentially a very safe place to put your cash. You can get around 4% annual return, and your money is basically locked away for a month. So this is where the majority of my cash is right now. As you can see, I've got about £60,000 in Treasury bills. Not a lot currently sitting in the market because I am moving out and I'm looking at buying a property. So if anybody has any advice on how much of this money I should put towards a mortgage and whether I should keep the majority of it in the market, if anybody has any advice, please let me know down below. Right, so if you have any questions about how I made it to where I made it, please feel free to ask. I'm trying to be very open with how I've done it, and hopefully you've learned something, and hopefully this has hit the desired audience. Thank you for watching, and have a great rest of your days.